Welcome to My Money Buddy, the monthly update in December 2020. We saw another bank failure last month of the Laxmi Vilas Bank, and I thought it's important to talk about some of the points that you need to keep in mind to evaluate how good is the financial health of your bank. There is very little that you can do once the bank faces an action from the regulator. And here are a few preventive checks that you can have in place while evaluating your bank. So, first, don't get lured by the high rates that the bank is giving you. High rates is a sign that the bank is desperate for deposits and is trying to lure customers. And essentially, just because you're getting 1 to 2% higher doesn't mean that you need to go in for this particular bank. It's also important to diversify your fixed deposits among different banks. So maybe, have your deposits between 2 to 3 banks. And of course, remember that the deposit guarantee insurance in any bank is rupees 5 lakhs per holder per account. So even if you are going with banks that are giving you a higher interest rate, you might want to limit your exposure to rupees 5 lakhs. Very importantly, do check the financial position of the bank. The information is freely available on the internet. There are 2 numbers that you need to check. The first is the capital adequacy ratio, and ideally capital adequacy ratio needs to be above 12%. The other is the gross NPA ratio. So this is basically the bad assets in the bank, and this ratio needs to be below 10%. So do check these numbers before you decide to invest in a fixed deposit of a particular bank. The other big event that happened last month was that Karvy Stock Broking was disqualified as a broker in both the Bombay Stock Exchange as well as the National Stock Exchange. This happened due to the fact that Karvy had done certain transactions illegally. Essentially, they had pledged customers securities without their knowledge, and they were not able to put back the money in the accounts. While many customers have got the money back, if you haven't got the money back, then you need to submit proof that the stocks are missing. So essentially, you can get a transaction statement basically, which shows that Karvy has transferred the stocks from your demat account. And once you submit this, you need to also open a new demat account in another depository. And once you set that up, you'll have to get the client master report from Karvy, which basically has the client ID, the DP ID, and the contact details. And this client master report will have to be sent in physical form to the new broker. Since the ownership is not changing, there won't be any tax implication. If you have invested in mutual funds basically through Karvy, well, firstly, you can get a statement from the MyCAMS website where if you choose the consolidated statement option, you get the statement of all the holdings that you have, which could be managed by different RTAs like CAMS and Karvy. If you want to redeem investments from any of these holdings that you have invested through Karvy, well, you can always go to the mutual fund website and do so. Now, if you had purchased mutual funds through your trading account at Karvy, you will need to approach them to figure out if your units are safe and whether you can really sell and redeem your money. But I think the starting point is really to get that consolidated account statement, try to see if you're able to place a redemption. And if you are not for whatever reason, then approach Karvy. Given what has happened, I think there are some preventive measures that you can take in place with your depository accounts or your demat accounts. The first is to update your mobile number and your email ID so that whenever there is a transaction, then you get an alert. Give a limited use POA, which is only used for pay in and payout. And it's not like giving a power of attorney to the broker to let them do whatever they want to. Go with a broker who gives you a monthly account statement. Don't leave idle funds lying around in the brokerage account, and of course check your demat account. You probably would get it on a monthly basis, but check your demat account every month. I do hope most of you are getting the NSDL statement. This is a statement that comes from NSDL, which has the list of all your holdings across stocks, mutual funds that you hold either directly or even if you've invested through some broker. All the information along with the transactions that have happened for the month will be shown in this particular statement. So I do hope that you are getting the NSDL statement. The third change that has also happened is that there have been some guidelines put in place on proportionate deductions under health policies. Now, what was happening all this while is that suppose you are hospitalized and you are eligible for a particular room category and you choose a higher room category, what happens is that the doctor's fees, the diagnostic tests, the medical equipment, or even medicines, the cost of all of these is also charged proportionately according to the level of room that you have chosen. What IRDA has said now, and this is applicable from October 1st for new policies and April 1st, 2021 for existing policies, is that there are certain expenses, and these are known as associate medical expenses, which have to be declared as a part of the policy. And these expenses are allowed for proportionate deduction, which means as per the room category chosen. But there are certain expenses like the cost of diagnostics, cost of pharmacy, cost of medical equipment, and ICU charges. These costs have to be standard and they're going to be charged at a standard rate and not based on the room category that you have chosen. This is a very good move by IRDAI because as we saw during COVID, that many people actually ended up paying huge out-of-pocket expenses on the consumable. So to some extent, this issue has been taken care of, and this will only mean lesser outgo for customers and a higher claim amount for them as well. Finally, remember that the due date for filing income tax returns is December 31st, 2020. So I do hope you're doing so. And if you don't do so, there will be a penalty applicable. So do ensure you spend the next few days and close this matter out as well. Do click on the bell icon to subscribe. We do look forward to your feedback. Cheers.